Children and adults have always been enchanted with the famous 1939 classic, The Wizard of Oz. Even today, watching Dorothy's desperate attempts to find her way back home puts viewers on the edge of their seats. And why wouldn't it? Each and every one of us can relate to wanting to be in the safe, warm sanctity of a place called home. There is no place like home. Having a place to call home is the American dream, and for generations of families, it's been the pathway of opportunity to building wealth. Today, millions of families are facing foreclosure, and the realization of losing their home is emotionally and financially devastating. The culprit? Statistics point to a large number of predatory loans by subprime lenders who've managed in the last few years to fly under the radar of regulatory agencies.
Up until now, essentially the subprime market is, for all intents and purposes, has not been regulated. And what's interesting is that for many of these lenders who did not make a big enough volume of loans to come under a law that's sort of a disclosure law. It's a law called the Home Mortgage Disclosure Act. And without getting into a lot of legal mumbo-jumbo, it's basically a law that Congress passed a long time ago that says, banks, you have to report who you made your loans to, the race of the folks, and the national origin and the gender of the folks you made the loans to, and where you made the loans. But a lot of these subprime lenders, they don't do a big enough volume to come under this law.
Subprime loans were once viewed as a means to increase home ownership. It was an avenue for people with less than perfect credit ratings to get home loans. Subprime lenders took risks, so it was expected and acceptable for loan rates to be higher than prime loans.
Well, there used to be an expression that not all subprime loans are predatory, but virtually all predatory loans are subprime loans. And there have been and are legitimate subprime loans in the marketplace, but that distinction between predatory and legitimate subprime has blurred in recent years. Generally, predatory practices are practices that take advantage of a borrower's lack of knowledge, a lack of financial sophistication, either by imposing more onerous loan terms or more expensive loan terms than the borrower is aware of.
Some critics blame homeowners in crisis as having poor judgment for purchasing homes they could not afford. According to consumer organizations and fair housing agencies, this is far from being truthful for many families now facing foreclosure.
Consumers are often sold a bill of goods. You know, there are many professional mortgage originators, brokers, and others, but the reality is that unfortunately all too often consumers are told refinance and I can save you money, but often those refinance quotes do not include the taxes, do not include escrow for insurance. Sometimes people think they're getting a fixed rate when in fact they're getting an adjustable rate, or they may not understand the way an option arm loan product works.
I think lending is a complicated business, and the relationship between a banker or a mortgage lender and a borrower should be very much, in my mind, like the relationship between a lawyer and a client or a doctor and a patient. When I go to a doctor, I trust the doctor. Well, when you go to a mortgage lender, you trust that the mortgage lender is going to tell you, based on our expertise and looking at your reserves, your credit score, your income, the size of the loan, the amount of debt you already have, we think that you can afford to pay back this loan based on our experience. And they have a lot of experience they can rely on. And in a number of these cases, it's not even a question of being complicated. It's that borrowers have been deliberately misled.
2 million homeowners are potentially at risk of losing their homes this year and next. There is no question that the current epidemic will not only have devastating effects on families losing their homes, but harsh consequences for entire communities as well.
So the collective impact of foreclosures affects not just the homeowner who's at risk of losing their home, but the surrounding neighbors who find a decrease in their home values even though they've been making the mortgage payments. And also there are spillover effects, so that if it reduces property values, That means probably localities have less tax revenue from real estate taxes and less money to spend for various government services, schools, police, fire protection, and as a result, the whole community's taxes may wind up getting increased, all as a result of this run-up in foreclosures.
According to a report released by the Federal Reserve, African Americans were likely to receive high-cost home loans, followed by Latinos and then Caucasians. A similar study by the Association of Community Organizations for Reform found the same pattern even when income was equal. Despite media attention, the Fairfax County Human Rights Commission says unethical lending practices continue and resulting foreclosures are hurting minority groups, the elderly, and women disproportionately. The Commission receives and investigates complaints filed by any person who believes they have been discriminated against in Fairfax County.
Well, we exist under the ordinance that was approved by the General Assembly initially in 1974, and we had an upgrade of that. We've had a couple of upgrades of that original ordinance to allow for us to accept and process or adjudicate cases in a wide range of areas. We prohibit discrimination in employment, in medical care, in education, in housing, from all of the major factors of race, color, religion, sex, national origin, age. Differently in employment cases, the age part kicks in at 40, whereas with housing, it doesn't. You can't file a discrimination case on housing until you reach the age of 55. But we tell all individuals who live or work in the county, if you believe that you have been discriminated on a matter of housing, contact the Commission.
3 out of 10 subprime loans is going into default. That's historically unprecedented. And what's really painful about it is when you look at who's taking out subprime loans, you find there's a much higher incidence of subprime use by minorities, African Americans, and Latino homeowners in particular. Also by women. Women who are borrowers of mortgage credit tend to use subprime loans a third more frequently than men do. And in fact, wealthier women, women above the median income in their local community, the figure even increases. They take out subprime loans 5 times more than their male counterparts. So this is not just a low-income issue, but particular consumer groups in our society are impacted a lot more because they use subprime much more frequently than others do.
Senior homeowners are a very attractive target for predatory lenders. Most own homes with substantial equity. Because many seniors are on fixed incomes, they see refinancing as a means to pay for home repairs and medical expenses or to consolidate bills. Joanne Jorgensen trusted a broker who was a trustee from her church to refinance her mortgage. Joanne believed she had signed papers for a fixed-rate 30-year loan and was given a figure for monthly payments within her budget range. She didn't become suspicious until 2 weeks after signing the papers. The broker and his wife moved to North Carolina, and a conversation with her pastor convinced her to have someone review her loan documents.
Well, the first thing I did was when we found the employment and salary fraud, I came back home and found a North Carolina number and called the broker and his wife, and I said, what you've done is committed fraud. You have created this salary for me. You've created this job title for me, and I'm on Social Security disability. I can't work, and they knew it. And they said, oh, the lender knows you can't work. And I said, but this is fraud. And I said, I'm looking for my paperwork. My monthly payment is due in the 2000s. He said to me, go call the pastor and ask him to say you work at the church. And I said, I just told you that's fraud. And he said, can't help you. And I have been paying over $4,000 a month.
Well, Joanne was the victim of mortgage fraud and predatory lending. So Joanne's mortgage broker actually gave her a loan that was very different in terms of the terms and conditions than the loan she thought and believed that she was going to get. Joanne never really fully understood the true terms and conditions of her loan until well after she had signed the loan papers and it was too late to rescind the loan.
Well, I trusted the broker, and I didn't read the paperwork. He had refinanced me before, and everything was okay. So I didn't think not to trust him again. But I just can't believe what's happened to me. So don't trust anyone. I don't understand it all. I'm learning, but.
Well, fair housing organizations have different levels of services, and we do provide help to victims, but there are other organizations, loan counseling, housing counseling agencies, who provide assistance to consumers as well. What we often find out is the consumer has no idea what their loan details really are, and they also don't understand how they got into this kind of a loan. So oftentimes they thought they had a fixed loan when indeed they have an ARM, an adjustable rate mortgage. Sometimes they believed they had a fully amortizing loan in which they would be through paying for the loan in a set number of years, when indeed they have a loan with a balloon rider. We act as a liaison between the consumer and the servicer so that we can try and get that consumer into a loan that they can sustain and that they can afford.
As ugly a fact as it is, statistics prove there are racial, age, and gender disparities in fair lending for families who are credit-worthy for prime loans, but instead receive subprime loans.
Yes, we know from research that anywhere between 30 and 50% of consumers who received subprime mortgages or higher cost mortgages actually could have qualified for a prime loan.
There are very effective ways to avoid being drawn into predatory lending scams. When buying or refinancing a home, consumers should question everything before signing papers.
All right, so I'm going to ask you some questions about an application here.
Sometimes lenders who are engaged in predatory practices will add on additional points and fees. And there are caps that are allowed under the law about how much people can afford. So that's something to watch out for. Points that you are asked to pay, or added charges or fees at the closing. Those things can be regulated, and if you have any questions about those, you should be very careful and go see an attorney or go see a local banker or a mortgage lender, someone who you use, a friend who you know, who can tell you, is this a legitimate fee or is it not?
Predatory lenders who put homeowners in danger of foreclosure are also preying on these same consumers seeking help to try and keep their homes. Residents should proceed with caution if they receive unsolicited letters in the mail offering cash that appears to be from a government agency. To prevent a lender from taking unfair advantage of valuable assets, residents should be alert to the following signs. Unsolicited letters that use similar variations or the actual name logo or seal of companies that have established reputations, such as government agencies. A one-size-fits-all recommendation to homeowners to refinance to get cash out or get a home equity line of credit based on unsubstantiated claims or predictions about the housing market.
Another issue that consumers in Fairfax need to be aware of is some of the foreclosure scams that are becoming very prevalent. There are many for-profit organizations that are masquerading to try to help consumers. In fact, what they're doing very often is gouging consumers, stealing title, or offering to rent, really falsely rent back a property to a consumer with the hope of becoming an owner again. And these, frankly, should be reported to Fairfax government. They really are better business scams, and there are all too many of them right now.
It pays to research the market for a home loan with different lenders and check their complaint history with Fairfax County Consumer Affairs Branch or other regulatory agencies. If you are having difficulty making your mortgage payment or are falling behind, contact your lender and inquire about programs available to avoid foreclosure. If you feel you have been discriminated against under fair housing laws, the Fairfax County Human Rights Commission will investigate and work to resolve your fair lending complaint. Give them a call at 703-324-2953, TTY 703-324-2900, or visit their website at www.fairfaxcounty.gov/HRC. There is no place like home, and help is available for families trying to avoid foreclosure through intervention and education.